Internal Revenue Service IRS tax news. Get ready for taxes. Steps to take now to make tax filing easier in 2021. IR 2020-263, November 24th, 2020, Washington. The Internal Revenue Service today encouraged taxpayers to take necessary actions this fall to help file federal tax returns timely and accurately in 2021. This is the second of a series of reminders to help taxpayers get ready for the upcoming tax filing season. The special page, there's a link to the special page here, updated and available on IRS.gov. The IRS website, IRS.gov, outlines steps taxpayers can take now to make tax filing easier in 2021. 2020 has been a busy year with a lot of changes. To make sure taxpayers don't miss out on tax benefits or make mistakes, they can take a few simple steps now to make filing their taxes easier in 2021. An important first step to getting taxes ready is to gather all tax records. Having records organized makes preparing a tax return easier. It may also help discover potentially overlooked deductions or credits. Most income is taxable, so taxpayers should gather income documents such as W-2 from employers, Form 1099 from banks and other payers, and records of virtual currencies or other income. This also includes unemployment income, refund interest, and income from the gig economy. So the default position from the IRS, or basically the tax code, the law here would be that anything that you're getting, anything you're receiving is considered basically income unless it falls into some bucket, which means it's not included in income. In other words, if it's income, it's going to go on your tax return as income, which will typically be a bad thing for taxes because then you're going to be paying taxes basically on the net income or the taxable income. So the things that are included on the tax return, anything that you receive during the year is in essence income to the IRS, basically, unless it falls into a bucket as being exempt or not something that you need to include in the income line. That will, of course, include wages, but it would also include things like the gig economy, which is something that the IRS is a little bit kind of more concerned with these days to make sure that people are reporting the gig economy work because they're having more trouble tracking that stuff down, because the 1099s and whatnot and W-2 forms, the forms that report the income, might not be as prevalent as they would in other areas. Same with the virtual currencies. So they're emphasizing those areas. There's links to the virtual currencies and gig economy here if you want more information on them. Beginning in 2020, individuals may receive Form 1099 NEC, non-employee compensation, rather than Form 1099 MISC, miscellaneous income, if they performed certain services for and receive payments from a business. Please refer to the instructions for Form 1099 MIS and Form 1099 NEC to ensure clients are filing the appropriate form and are aware of this change. So you can see a link to here with the Form 1099 and the instructions for Form 1099 MIS and Form 1099 NEC. Taxpayers may also need Notice 1444, Economic Impact Payment, which shows how much of a payment they received in 2020. So this is the stimulus payment received in 2020, which in some ways is kind of tied to the 2020 tax return, even though it was based on 2019 or 2018. In other words, if there's any problems with the economic impact payment, they're looking to fix them, to rectify those problems in 2020 tax return filing, which would be done in 2021. The notice that would help to show what the payment was that was received is going to be this form or notice 1444. So this amount is needed to calculate any recovery rebate credit they may be eligible for when they file their federal income tax return in 2021. So the recovery rebate credit, then when you hear that term, it's going to be something that kind of applies to the economic impact payment. So you want to be saying, okay, economic impact payment form notice 1444 is going to be tied to what we're going to be calling now the recovery rebate credit, which is going to be the credit that could be there or potentially be there if there was some kind of problem with the economic impact payment that would then be adjusted and fixed with basically the recovery rebate credit, which would be tied to the 2020 tax return filed in 2021. So people who didn't receive an economic impact payment in 2020 may qualify for the recovery rebate credit when they file their 2020 taxes in 2021. To see information from the most recently filed tax return, recent payments, and more, taxpayers can sign up to view account information online. There's a link to the account information here. Taxpayers should notify the IRS of address changes and notify the Social Security Administration of a legal name change to avoid delays in tax return processing. Taxpayers with an individual tax identification number, an ITIN and ITIN, there's a link to the ITIN here, should ensure it hasn't expired for filing a tax return in 2021. For example, ITINs not used on a federal tax return at least once in the last 3 years will expire on December 31st, 2020. If the ITIN has expired, IRS recommends taxpayers submit Form W-7. There's a link to the Form W-7 here. Application for IRS Individual Taxpayer Identification Number now to renew an ITIN. Taxpayers who fail to renew ITINs before filing a tax return next year could face a delayed refund and may be ineligible for certain tax credits. Time is running out to use the tax withholding estimator. There's a link to the tax withholding estimator here, a tool on IRS.gov, the IRS website, IRS.gov, designed to help determine the right amount of tax to have withheld from paychecks. Taxpayers can use the tax withholding estimator to help determine if adjustments to withholding are necessary. So obviously it's the end of the year at this point in time. And so if there's any adjustments you need to make to the withholdings or the payments that you're making, so that you do not have to owe money when you file the tax return, you want to make sure to do them now. You want to do that not just so that you get a refund when you file the tax return or you don't owe money when you file the tax return, but to avoid penalties and interest. And so the way to avoid penalties and interest is to pay your taxes that are owed in the year in which the income was incurred. So in 2020, you want to be paying the taxes owed in 2020. Otherwise, the IRS could assign interest and penalties on that amount, and that's why we kind of shoot for a refund. And so because there's been a lot of changes in 2020, there might be a lot of people that kind of switched jobs up or might have some unemployment income, which is actually taxable income, or they might have multiple people working multiple jobs in the household, which is more common more and more going forward, which complicates the amount of withholdings that need to be made. And also the tax filing for 2019, which is often the prior year filing, in other words, is often the thing that's going to be used in order to determine whether the withholdings for the following year are appropriate or not. That was delayed, so many people probably filed it later in the year, and they may not have adjusted their withholdings. More people probably filed on extension possibly and may not have adjusted the withholdings for the 2019 tax return. And even if they did, 2020 could be looking a whole lot different. Therefore, you want to use the tax withholding estimator, and that's going to be an estimator tool to determine what your withholdings should be. And if you need to adjust your withholdings at the end of the year, now's the time to do it. And if you could do so with the withholdings, meaning in W-2 like wages, increasing the withholding by filing a W-4 change to the employer, asking them to withhold more money, then that would be the way to go typically, because the IRS will typically assume that those withholdings then were withheld evenly throughout the year. If you don't have enough W-2 wages to be able to withhold enough to cover the amount of the tax debt that you might be incurring and therefore incur penalties on top of it, then you may have to actually make estimated payments, actually pay the IRS, write a check to the IRS. Although when you write a check to the IRS, they see it in the third or fourth, they'll see it like in the fourth quarter. And they still might have some penalties and interest on it because they're not going to basically assume that payment was taken in the whole year. So bottom line, many people probably would want to check this tax withholding estimator if they haven't done so yet to avoid penalties and interest, increase the payments if they need to at this point in time so that they avoid penalties and interest for the taxes in 2020, and then do it again, or have your tax professional help you to make an estimate for what needs to be withheld in the 2021 so that you can then adjust your withholdings back down to what they need to be for 2021. So back to the text. Taxpayers receiving substantial amounts of non-wage income like self-employment income Investment income, taxable Social Security benefits, and in some instances, pension and annuity income should make quarterly estimated tax payments. The last payment for 2020 is due on January 15th, 2021. Payment options can be found at IRS.gov/payments. There's a link to that here. For more information, see publication 5348. There's a link to that here. Get ready to file a publication 5349. There's a link to that here. Year-round tax planning is for everyone. So there's a link to those two publications here. There'll be a link to this in the description.